Hi everyone, uh, we are back once again with the random spaces. Random in the sense, no set agenda for the spaces. A very light and candid conversation we can have. तो बहुत ज़्यादा serious या heavy dose का discussion is not something I'm aiming for. तो normal chit chat और आज चाइना का इंडेक्स देख के तो वो वाली फील आ रही है वो जैसे मीम चल रहा है ना आजकल ये क्या हुई so I thought of this topic China +1 or -1, right? So today I posted a very good quote by Fred Kelly. I think he wrote this somewhere in 1930s, wherein he said, "The day you sell is reasonably certain to mark the end of the decline, because you are not the only one who was finally scared into selling. You, being an average man, were merely representative." So likewise, this happens with most of us, and majorly 2-3 दिन का 4-5% is peanuts, right? कोई correction का बहुत मतलब correction कहना is a wrong word, right? So 4 to 5% correction in Nifty and people went haywire कि दुनिया खत्म हो जाएगी, and they were relating things to 2008 and even particularly, I mean, not to pinpoint anyone, but targeting segments from both the ends, right? Despite the fact that this market is a democratic place wherein we have an option that all, not all, but many a times, many of the participants can be right at the same time, right? So, very important thing in the market is we should accept that everybody has their style of investing, and the risk appetite, the goals, the process, everything is different from each other, right? So majorly thinking that everybody should be painted with the same brush is not a right approach. So that should always be kept in mind. And social media is one place which has become wherein people, I mean, looking for engagement and try to pinpoint at each other. So that is not something adding constructively to the people who are serious about investing. Serious in the sense, not that serious that one shouldn't be. So the seriousness in the sense ki whatever being shared, they eagerly try to learn the new nuances and put their due diligence in place. So those are certain things I wanted to highlight and discuss. So our audience is generous enough to join us at any point in time on any day. So again, this is going to be a short session, 30 to 45 minutes, and you guys are free to join as a speaker, wherein you guys can add anything about the topic or maybe anything under the sun provided related to the markets. And apart from that, if there are any questions, so comments are open and speaker is also open. I cannot assure you 100% right answer, but I try to answer the best in my capacity. And we have noted that whenever we start session, we often get good speakers and our friends join us on regular basis. So definitely we get an opportunity to get your questions answered on that front. So we already have one speaker at hand. So let's see what he has to say. So Mr. Bhavyank, yeah.
Yeah. Hi, thanks. So I think we have to see when we say China +1 or minus, right? -1, yeah. So there are, these are my views. I mean, there are multiple angles to it, right? China has been the growth driver since long for the world, okay? And it is not easy to replace China, even though Western world is looking at an option, right? But having option in next few years or even a decade, right? It is going to be very difficult. China geopolitically can be a risk to a lot of countries. So they are looking for China plus one, right? And when we talk about China plus one, right, certainly we as an Indian investor will look for that whether India can be that plus one or not, right? So even though India is trying, right, but it is going to take a lot of time, right policies, right government, and then other things will drive that, yeah. So certainly world is looking for China plus one, but it is not going to be easy. Yeah. That is what I want to say. Yeah.
Thanks, Bhavyank. So Sandeep, hi. So today this session is, I mean, we are not planned it to be a heavy session, a normal chit chat or in a very light mode and sense. So we were discussing आज की करेक्शन देख के वो मीम याद आ गया चाइना का कि ये क्या हुई. So on that note, anything you want to add around the topic or maybe on a
सी चाइना प्लस वन तो 4 साल से लोग डिस्कस. हाँ प्रिंस, हेलो, थैंक यू. मैंने कहा कि चाइना प्लस वन तो 4 साल से मार्केट में डिस्कशन हो रहा है, तो आई एम श्योर योर टॉपिक इज मोर ऑफ अ फन टेक रादर देन अ सीरियस वन, एंड दैट्स ओके ऑल्सो, बिकॉज आई थिंक एटलीस्ट ट्विटर में हम बहुत ज्यादा अपने को सीरियसली लेने लगे थे, एंड दैट्स रेसिपी फॉर डिजास्टर. डिस्कशंस, टॉन्ट्स, कमेंट्स, लॉन्ग थ्रेड्स. आई एम बेटर देन यू kind of posts, right? And everyone else is a fool. तो उस सेंस में it is good. And see, sticking to this, कल भी एक स्पेस हुआ था, तो लिटरली हर दिन फिर से होने लगा है, तो उस पे भी मैंने ये जिक्र किया था कि स्टिमुलस को अगर आप ध्यान से सोचिए तो व्हाट इज स्टिमुलस. इट इज लिटरली कि किसी को आप ब्लड चढ़ा रहे हो, किसी को ग्लूकोज दे रहे हो, या फिर फाइनेंस टर्म से बोले तो गुल्लक तोड़ करके पैसे निकाल रहे हो, right? It is not a natural condition. No one does stimulus in a normal time. Now stimulus works, and it works for valid reasons. But will it work कि एक चाइना जैसा मेजर इंडेक्स 45% बढ़ जाए? मतलब इट इज लिटरली लाइक कि निफ्टी गिर जाए 18,000 और कोई ऐसा स्टिमुलस आए कि वो सीधे बढ़ के 32,000 में हो जाए, एंड दैट टू इन अ वीक. No data change, no nothing, no one knows what will happen to that amount. It just was a staggering number which was being talked. So it had to have a limit, right? And it was very clear. जब मैंने कुछ दिन पहले ट्वीट भी डाली थी 3 दिन पहले, कि जब आई थिंक मंडे को या किस दिन का वो जो पहला फॉल आया था, कि इट लुक्स लाइक ए ब्लंट पैसिव सेलिंग. तो उस दिन किसी ने बोला था ये तो 2-3 दिन पहले स्टिमुलस अनाउंस हुआ था, आज क्यों एक्सेलरेट हो गया? तो उसमें क्या होता है कि मेनी टाइम्स यू आर फोर्स्ड टू डू. आप देखिए, इसको पहले हमें ये देखना है कि ये जो फंड फ्लो है, दे आर नॉट पीपल लाइक यू एंड मी. सबके अलग अलग मैंडेट है. तो जब एक ग्लोबल हेज फंड रन होता है, मान लीजिए कोई लॉन्ग लॉन्ग इंडिया शॉर्ट चाइना लेके बैठा है, तो वो 10% का मूव तो झेल जाएगा, 40% में तो लॉस वॉस बुक करके उसको जाना ही पड़ेगा. ठीक है. फिर पैसिव ईटीएफ्स के बारे में हमने बात की थी. फिर कई जगह लोग लेवरेज ट्रेड लेकर के बैठे हैं. मान लो कोई चाइना को ऐसे ही सॉर्ट कर रखा है, तो फिर वो क्या करता है, जब आपकी मार्जिन कॉल्स लगती हैं तो आप जहां जहां से पैसे निकाल सकते हो वहां से निकाल के कवर करते हो. बट देन दैट डजंट मीन कि वो बैंकक्रप्ट हो गए. दैट्स व्हाट दे डू इट विद बिलियंस ऑफ डॉलर. नॉर्मल पीपल कांट सेल 50,000 करोड़, राइट? तो डिपेंडिंग अपॉन कौन सी स्ट्रेटजी, कौन से फंड मैनेजर है, क्यों कर रहा है, बिना उसके हम जाने कि ऐसा क्या हो गया कि 4 दिन में 50,000 करोड़ बिक रहा है. बट रिवर्स इज देखो कि 50,000 करोड़ की सेलिंग पे निफ्टी केवल 6% गिर रहा है. दैट इज द मैसेज. मैसेज इज नॉट 50,000 सेलिंग. 50,000 सेलिंग हमने 5 डेज के स्पैन में ऑब्जर्व कर ली, एंड निफ्टी ओनली फेल फ्रॉम ए वेरी हाई लेवल, जो कि इंडिया में हर आदमी कह रहा था. मतलब ऐसा भी नहीं है ना कि निफ्टी वॉज इन नॉर्मल जोन. हमने तो 4.5-5 लाख करोड़ की सेलिंग ऑब्जर्व कर ली है ना 4 साल में, जिसको मैंने पहले भी बोला था इसका जिक्र का, कि व्हाट इज द मेगा ट्रेंड. मेगा ट्रेंड इज रिवर्स कोलोनाइजेशन ऑफ इक्विटी. तो अब हम ये कह रहे हैं कि भाई तू हमारी इक्विटी हमको वापस दे, और हमको तुमसे चाहिए भी होगा तो हम डेट ले लेंगे. सो नाउ वी आर द ओनर, यू आर द फाइनेंसियर. पहले हम क्या करते थे, बिकॉज वी वर सो मच अगेंस्ट आवर ओन इक्विटी, कि पूरी एचडीएफसी जो बनी उसका, आई होप पीपल नो, मोस्ट पीपल मिस द पार्ट दैट एचडीएफसी इज नॉट एन इंडियन बैंक, it's an MNC bank. And why am I saying so? Till 2018-19 or maybe almost 21, exact ownership of HDFC Trends was 75%. And why not 74% or 73%? Because 75 के बाद एक ऑफ मार्केट चलता था जहां पे 6% प्रीमियम पे ये एडीआर बिकते थे. क्यों? क्योंकि एफआईआई हमेशा क्यू में लगे रहते थे. इट वाज द इजिएस्ट टूल टू टेक इंडिया एक्सपोजर बाय एनी एफआईआई. तो जो एचडीएफसी 1000 करोड़ से कंबाइंड लेवल में 10 लाख करोड़ की जो एंटिटी बनी है, उसकी 75% ओनर्स फॉरेनर्स के पास थी. अब वो उन्होंने 25% बेची है तो वो 50 पे बैठे हैं, तो अब हम ले रहे हैं. लेकिन अगर आप देखो तो एचडीएफसी 20 साल में बना है. 5,000 10,000 करोड़ कहीं से स्टार्ट हुआ होगा. वहां से लेके 10 लाख करोड़ की जो वेल्थ क्रिएशन है उसका 75% एफआईआई ओनरशिप थी. तो इसको रिग्रेट के सेंस में नहीं बोल रहा हूं, क्योंकि हम मेंटली तैयार नहीं थे. हम डेट देने को तैयार थे, हम कासा में पैसा डालने को तैयार थे, हम सेफ खेलना चाहते थे. तो एचडीएफसी हम ही से पैसे लेता था, बट एफडी के लेता था, और फिर हम ही को देता था इस बात के वो 4% निम चार्ज करता था. एंड इट डिड अ फैंटास्टिक जॉब. सो 25% तब भी इंडिया के पास था. लोगों ने यहाँ के म्यूचुअल फंड से भी पैसे बनाए, बहुत सारे पीएमएस ने पैसे बनाए. एचडीएफसी में लोग इतना क्यों बुलिश रहते हैं? क्योंकि उस स्टॉक ने कंपाउंडिंग की थी 20 साल. तो अब 20 साल के बाद अब 2-3 साल आपको कुछ फर्क नहीं पड़ता है. बट ये केवल मैं एग्जांपल ले रहा हूँ, एचडीएफसी को कुछ यहाँ पे नहीं कह रहा हूँ. आई एम जस्ट सेइंग कि सो द मेगा ट्रेंड इज those kind of FIIs are now struggling with India valuation. Why? Because suddenly Indians have become more aggressive. So that's the trend. Trend is not कि 50,000 बेच दिया अब इंडिया सब खत्म हो जाएगा, अब क्या होगा. Look, I told you, market was very toppish. I mean, everyone will have an opinion. That's the beauty of market. 26,000 पे भी you will find enough people who will say it is very logical. 28,000 हो जाएगा निफ्टी में. That is why they are buying. But at the same time someone is selling. मुझे लगता है ये obvious बात हम किसी 18 ईयर के बंदे को बोले या फर्स्ट ईयर फाइनेंस ग्रेजुएट को बोले समझ में आता है. टू से दिस or to remind this to people who are claiming to be in craft for 10 years, 20 years, 30 years, 40 years, I just find it unbelievable. I mean, I want to laugh at it. Sometimes even being human, I also get very irritated when I see people using abusive post, using words like मूर्ख, fools. जब बर्बाद हो जाएंगे पता चलेगा. भाई मैं बर्बाद होने ही आया हूँ. आप क्यों परेशान हो? Right? You question malpractices, you put your view, you say that you don't agree with the valuation. Valuation पे डिस्कशन नहीं करोगे तो फिर डिस्कशन कैसे होगा? कोई भी स्टॉक है, ये मेरा फंडामेंटल राइट है कि मैं इन्फोसिस को बोलूं कि ये ओवर वैल्यूड है, और किसी दूसरे बंदे का भी ये फंडामेंटल राइट है कि वो बोले अंडर वैल्यूड है. बट इन डूइंग सो यू डोंट नीड टू बी डिसरेस्पेक्टफुल सेइंग द पर्सन विथ एन अपोजिट व्यू is a fool and he will learn the lesson. One day तुम बर्बाद हो जाओगे तब तुमको समझ आएगा. भाई इतनी ड्रामेटिक लैंग्वेज यूज करने की जरूरत नहीं है ना. जस्ट पुट योर डेटा पॉइंट्स, दैट्स इट. इतना क्यों ज्ञान दे रहे हो आप वैल्यूएशन से बोलते रहो, दिन भर बोलते रहो. बी वेरी फॉर्म, बी असर्टिव. यू आर फीलिंग दैट इंडिया इज अ ग्रेट स्टोरी, डिफेंस बहुत अच्छा करेगा. मैं लेट्स से मैं उतना डिफेंस से बोली, इट्स ओके. मतलब इसमें कौन जोड़ी बात है? दैट मेक्स द मार्केट. कंसेंसस वहीं पे बनती है, राइट? तभी वो ट्रांजेक्शन हो रहे हैं. अगर 99% लोग फील करेंगे कि डिफेंस होगा तो वो 500 पीवी चला जाएगा. इट विल ऑलवेज बी ए लेवल वेयर देयर विल बी इनफ बायर्स एंड एट द सेम टाइम इनफ सेलर्स. दैट्स हाउ मार्केट वर्क्स. तो अगर वो एक्चुअली ध्यान से सोचो तो मार्केट प्राइस इज नथिंग बट एट दैट प्राइस वेयर मनी वेटेड ओपिनियंस विल मैच. आई एम नॉट सेइंग ओपिनियंस विल मैच, आई एम सेइंग मनी वेटेड ओपिनियंस विल मैच. If those opinions are not matching, it will again come to a level जहां पे it has to match. That's how market works. तो एनीवे प्रिंस फिर से सीरियस हो जाएगा. लेट्स टेक सम अदर स्पीकर्स एंड अदर लाइटर टेक्स.
Yeah. So, Arpit, do you have anything to say around the topic or maybe anything? And meanwhile, comments में एक question ये भी है कि जो चाइना का आज fall है, does it have anything to do with the US elections? Arpit, you there? So meanwhile, Sandeep, ऐसा कुछ एलिमेंट लग रहा है? ओके, अर्पित इज देयर.
चाइना वगैरह तो मैं इतना ट्रैक करता नहीं हूँ, मोस्टली अपनी कंपनी से ज़्यादा मतलब रखता हूँ मैं। वैसे भी बहुत स्मॉल साइज की कंपनीज है, मे बी 1000 करोड़, तो इतना ओवरऑल मार्केट से आई गेस फर्क नहीं पड़ता उनको। तो मे बी जो भी कंज्यूमर कंपनीज हैं या डिफरेंट सेट ऑफ कंपनीज हैं, तो यही है। एंड चाइना का तो वो जो हाउसिंग बबल है, जो मे बी 2021 से चाइना सॉल्व करने की कोशिश कर रहा है, जिसकी वजह से काइंड ऑफ रिसेशन टाइप्स भी है। मतलब मेरे को तो बहुत माइनर सा पुल बैक लग रहा है और मेरे को कोई रिलेशन भी नहीं लग रहा उधर चाइना का। तो मैं तो इंडिया पॉजिटिव ही हूँ।
थैंक यू. तो संदीप, इलेक्शन के लाइट में
question. नहीं. So first of all, China didn't fall today. China was closed for 4-5 days. So all these days when things were rallying, basically Hong Kong was rallying, which is not an exact proxy of China. That is one. And second thing is offshore shares. China proxies in different countries, etc. were rallying. तो एक ऑफशोर मार्केट भी होता है, जैसे एसजीएक्स निफ्टी है ना, अगर निफ्टी बंद भी होता है तो एसजीएक्स निफ्टी ट्रेड करता था. सो दैट्स वे चाइना का एक्चुअल इंडेक्स नहीं खुला था, बट दैट्स व्हाट पीपल यूज्ड टू से कि चाइना भी बढ़ रहा है. दैट्स व्हाई, क्योंकि ऑफशोर मार्केट विच इज मच लेस लिक्विड, एंड नेचुरली वो 4-5 दिन से बंद था. जब आज चाइना खुला तो वो जो एक्चुअल बढ़ा वो उतना नहीं बढ़ा जितना 5 दिन से प्रॉक्सीज प्लस हैंग गिर रहे थे. तो आज हांगकांग मार्केट गिरा है, चाइना स्टिल अप है, बट इफेक्टिवली जो 5 दिन में जितना बढ़ा था उसका 20% आज रिसीड हुआ है. दैट्स इट. तो बेसिकली overdone of 5 days was partially undone today. What will happen tomorrow is anybody's guess. But if we resist the temptation to predict what will happen in 2 days, 5 days, we can surely see longer the horizon, easier the analysis or prediction, right? Short horizon में किसी को कुछ नहीं पता, नहीं कल सुबह क्या होगा. But बहुत ही सिंपल सी बात है. These were outcomes of, see, all the problems which China has for last 15 years is only accelerating. It is not coming down, right? So एक तो उनकी 4-to-1 generation बोलते हैं, 4 grandparents, 2 parents, 1 kids, right? So they have again gone back to China +2 kids policy. But अभी एक बार जनरेशनल आदत पड़ गई, लोगों को समझ में आ गया कि एक किड ज्यादा बेनिफिशियल है, तो इट्स नॉट इजी ऑल्सो. सो दे आर इंसेंटिवाइजिंग, बट इट विल बी टफ. Then their obviously population has reached to a level where there is no longer cheap labor there. Then geopolitical, then the credit thing, then the biggest thing which happened actually after 2017-18 is the rule of law. So यूएस में एक बहुत बड़ा थिंक टैंक है, जो अलीबाबा वगैरह के आप वैल्यूएशन देखोगे आपको 6 टाइम्स पी पे दिखेगा, तो आपको हैरान रह जाओगे कि इंडिया में वो 70 पी पे सेम इंडस्ट्री टहलती है, यूएस में 30 पे है. अलीबाबा ऑल सेड एंड डन इज अलीबाबा. आई मीन इट इज ऑलरेडी बीइंग यूज्ड. इतनी बड़ी बैलेंस शीट, इतना कैश पे बैठा है. बट अगर आप ध्यान से सोचो, व्हाट यू बाय शॉर्ट रन में इज ए बिगर फूल्स थ्योरी, राइट? कि क्योंकि आपको कॉन्फिडेंस है कि 3 महीने बाद किसी को बेचूंगा तो इससे ज्यादा पे ले लेगा, क्योंकि तब तक बिजनेस बढ़ जाएगा या ये हो जाएगा या वो हो जाएगा. But someone who is trying to buy a company for 5 years, 10 years, what is he buying? He's buying in stake ownership, right? So when you see a country is not even respecting the promoter, as in the majority owner, what message it gives to the minority owner? And just not the Alibaba case, Jack Ma case, they did it with multiple billionaires one by one, कि वो सीन से गायब हो गए. Whether they are alive or safe or not, let's not get into that speculation, but multiple billionaires basically went away from the scene in China. That's one. Second thing is, एक बहुत ही उनका famous example है, which is actually good also on that social level, but at a capitalist level it is a scary thing, कि वहां पे edtech बहुत चला था during COVID, और ये कोचिंग्स बहुत चला था, जैसे इंडिया में कोटा है एंड फिजिक्स वाला एंड ऑल दैट, राइट? सो वैसे एक चाइना में बहुत बड़ा सिस्टम था ट्यूशंस का, फीस का. ये वन फाइन डे ही थॉट इट्स ए सोशल लेवल एंड इट ओवरनाइट इट जस्ट स्क्रैप्ड इट, मेड सर्टेन पॉलिसी व्हिच मेड दैट इंडस्ट्री निल, लाइक ओवरनाइट. जैसे इंडिया में किया, उस पे किया ना अपना गेमिंग पे, बिकॉज दे वांटेड पीपल टू कम टू एफएनओ एंड एसएमई, तो उन्होंने उठा करके गेमिंग पे जीएसटी लगा दिया टर्नओवर पे. तो शुरू में लोग स्टंट रह गए, उनको लगा कि यार ये तो कुछ ज्यादा है, प्रॉब्ली कुछ इसमें ड्राफ्ट में प्रॉब्लम है. बट देन व्हेन दे मेट अगेन एंड अगेन फाइनेंस मिनिस्ट्री, दे सिंपली रियलाइज द इंटेंट वाज टू bring down volumes to such level that इसके बाद भी किसी को करना है तो कर लो, किसी भी प्राइस में कुछ ना कुछ बायर सेलर तो मिल ही जाएंगे, कंज्यूमर्स मिल जाएंगे, बट देन गवर्नमेंट डजंट वांट इट टू फ्लरिश, इट्स नॉट अबाउट टैक्सेशन, सिंपल सी बात है। तो वैसा पॉलिसी चाइना ने अपने एडटेक के लिए ले लिया। तो विथ सच डिसीजन आप इंडिया में जब आओगे और आपको सडनली लगे कि आप बहुत इन्वेस्ट कर रहे हो और सडनली एक गवर्नमेंट आएगी बोलेगी नहीं ई कॉमर्स बंद है, आज से केवल फिजिकल रिटेल होगा, with that kind of a fear, obviously valuations will suppress. So that is another, in fact, one of the biggest angle is a lot of global funds don't invest in China anymore. Only people who are running the global EM mandate, people who literally have a compulsion to follow. So if MSCI emerging market, China used to have like 25-30% because of major underperformance of last 3-4-5 years. It came to like 20%. So you have, as per mandate, you have to be 20%. Even that, most people were not following. So that's what you hear when you say they're -5 China, +10 India. What does it even mean? It basically means when they are given $100 to invest against a benchmark of MSCI emerging market index, they are saying China, India weight, let's say is 20%, but I will have 30% invested in India. That's what I mean by +10 India, right? So that +10 India and -5 China basically became +5 and -3. This is just an example. So in that rush is what we saw in last 5 days. That's the 50,000 crore kind of a selling by some set of FIIs, but that's not a global view. I mean, that's not a consensus view, as in it's not like everyone on the street did it.
Yeah. So Sandeep, we also got Monetary Wealth with us. He has something to say on China. So over to you.
I okay. I'll try to keep it quick. So look, the Chinese market has run 35% in a month, so some level of profit taking was warranted. Also, the mainland market was closed for a whole week, and Tuesday was the first session. So there's some adjustment between pricing in the main China market and the Hong Kong market. So it's purely an adjustment. It was overdone, but with respect to a 35% move, it's just again, expected that it's overdone. The other thing that happened yesterday was there was a policy meeting where the expectation that there's a committee called NDRC, uh, National Development Resource Council, which sets policies for China going forward. And there was an expectation of a larger support from the government for markets and policies, and that was not to be. The policies came in pretty under. So that was the second reason. So it's not. So as far as the percentage of allocations, look, they are not point in time changes, right? It takes a while for large funds to move money. They don't suddenly take out 10% from one market and stuff it into another market. They normally move money in cash and readjust it over time. But what we've seen, at least in larger funds, right? These are not funds that have fixed exposure criteria like emerging market fund, but rather hedge funds that at some point believed that China was severely undervalued and took a huge risk on large positions. And there have been a handful of those big hedge funds that have in the last filing disclosed massive Chinese positions amounting to 20-25% of their holdings. So this wild gyration is mostly the two things I mentioned, plus possibly some of these funds taking profits, right? You've had even for a hedge fund which is 5-6 times levered, if you're up 30% in a month, you want to take profits, and that's all it is. There's nothing more to it.
So just one counter question: the hedge funds you're talking about, apart from the David Peter, anyone else came on record? Like there are series of hedge funds, you mean, which went so long last
There
quarter?
are there are a bunch. He said he went 23% of his portfolio into China. It's a little bit extreme, but there are lots of them that have disclosed individual positions in multiple companies, right? Baidu.
Yeah. He probably triggered it also because he went on CNBC, he said all in, and he very famously said that in 2009-10 also. A lot of people still remember that.
Yeah, yeah. I mean, look, you have to take what they say with a pinch of salt,
Hmm.
right? They are obviously looking for exit liquidity. They are loaded up and they want to get out, and they want everybody else to pile in so they can move
Same.
out, right? So again, he's not. It's not somebody until the next filing. We won't know what his position is, but I'm willing to bet that it's lower than what it was last time.
No, fair enough. That happens in Indian markets also, in Twitter also. So you take a position, you promote it. That's human nature. Anyway, back to Prince. Just one thing, actually.
So Bhavya,
Probably I'll go a little direct and just more to the same speaker again, Monetive Wealth. See, what is happening on this? Yesterday I did. I'm no longer tracking US markets that much because I don't have that much of exposure and I don't do index derivatives in India, so I don't need to, really bother for S&P and Nasdaq on a daily basis. But this rates are back at 4 again, so that Fed taper, that never happened, right? And surprisingly, US markets are up. So obviously there was this employment data, and then PMI also came well. And this is so against the consensus view of 1 month back when everyone thought that rates will crash and that will drive the rally. So stock markets are up because the economy is much stronger than they thought. But TLT and all these, long treasury ETFs are down again purely because they realize that economy is still very strong. Do you think that changing purely because of elections, or probably Fed will not uh, chip in as much as right wings basically suggest them that they will do? Basically the rate
So
expectation
okay.
has come down to I think 4% for another 100 bips and only 18% for another 50 bips. That's almost like half cut, hardly from a weekly.
Yeah, I mean, look, so I think there's a lot of heart wrenching about whether that 50 was necessary or not. This the first statement that Powell made in his the first sentence that he uttered in his statement was that the level of restriction in the rates was unnecessary given the long-term inflation rate was falling and it was the PCE was at 2.5% and the Fed fund rate was at 525, 550. So that 200 and odd basis points or 175 bips of restriction was not justifiable, and that was the point they were trying to make, is we can take down the rate and still be in reasonably restrictive territory while we let the inflation fall further and help prevent weakening of employment data. Now, based on that, you had Fed funds, immediately after that meeting saying, okay, we are likely to get another 50 and a 25 this year in the next two meetings. And after the employment number came out super strong, that started disappearing. So I think the point is it's still restrictive rate. Unless we have a big surge in inflation, I still think we get a cut, but probably a lot smaller than expected, right? Maybe maybe they can afford to skip next time if the data doesn't worsen and we still get another 25 bips in December. The market itself rallying is a bunch of things, right? So one, leaving aside politics, I don't want to get into that part at all. But we are entering the earnings, release week this week, right? Friday, we already had Pepsi, was so. We have Delta Airlines tomorrow, and then we have JP Morgan, BlackRock, and who else? Wells Fargo, I think, on Friday, and then it really kicks off the following week. The expectations are for earnings to be rather slow in terms of growth this quarter and a big pickup in Q4. And those expectations are just tightening. So I think the market is just realizing, the economy is doing well. We have most of Fed estimates somewhere between 2 and 3.5% GDP growth, which is still very solid growth. So we're far away from any potential for a recession here. As long as we have inflation under control, the Fed is not going to, want to tighten anything further, meaning, make it any more restrictive. So at best, they are going to reduce. At worst, they're going to stay on the sideline. And given the economy is doing well, that's Goldilocks. And, if your earnings keep up, you've got the best of the situation. So that's why the markets are recovering. And this week also we have a bunch of data. We have NVIDIA AI event that's ongoing. We have Tesla's robo-taxi event on Thursday. We have an AMD AI event on Thursday, and all these earnings. So there's a lot of positives for markets to digest.
Sure. Prince, maybe we can take a question, then I'll probably have few more discussion points if Monitive is here, just to probably extend discussion a little bit. But before that, I think Bhavyank has raised his hand for some time, so let him come up with his point or a question. I don't know. Bhavyank,
Yeah,
over to you.
yeah. Thanks, Sandeep. So I have got two questions. Okay. So the first question is, since most of us consider China as a third world, okay, there are a lot of uncertainties, a lot of unknowns. We don't know what is there in their economy. Anything can come out, right, and at any point in time. So if FIs are selling, right, where is the money going? That is the first question. Now the second question is, if FIs is selling, then is it a good for Indian economy or it is a bad for Indian economy? Because our domestic institutions, right, and then retailers are absorbing all those sell, right? So over a period of time, we'll be less dependent on FI. So question is, FI selling is good for Indian economy or it is a bad for Indian economy? Yeah.
Okay, so flat answer. First of all, with little politeness, I'll request you to not go into these kind of narratives that China is third world. I mean, it's not. I mean, whether you question it as a first world or not, the reality is one. It is $10,000 per capita, which is 4 times us. It's surely not an EM basket anymore. I mean, it gets classified. In fact, many in political circles as well as in economic circle are the people who deal in WTOs and IMF of the world. They often complain that China pretend to be an EM, but it's no longer a EM. So there is a lot of talk to start treating it like a DM rather than a EM. Right. So it's surely not a third world. You may call it a first world or second world. That's a debatable point. Second thing is, we don't trust our, forget about who are we. I mean, India doesn't invest in India, but from FII's perspective, most of them were short purely because one, it didn't deliver. See, every year they report 6%, 7% kind of a growth. So 15 years, that's a major compounding, right? And no matter how much you question their economic data, the reality is their capacity has gone up. Everything has gone up in 15 years. In fact, there are enough softer signals also to see their power in every context has gone up. So no one can say that they haven't performed 15 years, but still they are almost 40% down from their 2008 levels. So in a sense, it's one of those cases like Russia. We a lot of us think that Russia is it is poor place, as in compared to, let's say, Western Europe or this thing, but it's not like an India kind of a emerging market, right? But then people don't make money because there is a crony capitalism. Only Putin and his cronies will make money. So that's why you will never hear anybody saying I'm long on Russia or short on India. It just doesn't exist. In similar fashion, for a vast majority, it doesn't exist. At the same time, it is still 20 trillion kind of a market economy. Someone is owning it. It's not all Chinese. So there are enough China bulls, especially people who are very fond of value commodity style of investing. So that money is still there. Now coming to, if they are selling from here, they are not going there. They're obviously mostly going there. That was the assumption, but I agree with Monitive. In fact, you probably joined late, so I wasn't saying that is just +10 and -5 kind of an adjustment. In fact, at the opening of the space itself, I said a lot of it can be those margin levered calls undoing kind of a thing also. Those kind of a strategy. It's just not the the passive ETF or the slight alpha kind of a mandate. So it has to be, mix of many things. But given the intensity of selling in India, it was almost like, they were trying to monetize as much. See, it is not about 10,000 crore. In a day, they can't sell 1 lakh crore, no matter where is Nifty. Even if you take down Nifty to 5,000 technically, I mean, it is just an hypothetical thing. You won't be able to sell 1 lakh crore in a day, because how selling happens? It happens via baskets, right? So 9:15, HDFC just buy out whatever available. Next, 5 points. So you increase the intensity of fall, but in a day to sell 10-20,000 crore is a massive amount, right? So that's what they were doing. Like every day selling, whatever price you just sell. Why? Because they are probably trying to cover it here. So that was the thing. Second thing, I think you were asking whether FII selling is good or not. Now we may be philosophical. We may say we are indifferent, but no money going out of any country can be good in short run. In wider scheme of things, you can claim that we are less dependent, more dependent. First of all, we are not at all dependent on FIIs anymore. It's like 18% only. That is actually not even high by any standard. So if India has to really be a G20 style, I mean, it will probably never be G20 on per capita standards, but it will. I mean, it is already G20 and G8 or G7 even on absolute terms. From that perspective, for a 5 trillion economy, 18% is not at all huge. So we say it doesn't matter. We take little pride. Even I started opening on a light note, but that was fun take, reverse colonization. I mean, you always try to see the positive side of it. So in a sense, FIIs became another set of, and that is why, in fact, I requested it to Sharad Dubey ji also when that ET guy came. I said we should not only get fixated with FII and DI, we can simply give the all category, promoters, retail, FII, DI. Let people understand the trend. Why only talk about FII sold and DII bought? What about any other components, right? Everything should just tie up. So FII selling cannot be good for sure. Only thing at max you can say, we are indifferent, we are much more resilient market. And when FII sell, don't think of it from Nifty valuation perspective. Often we should try to think, we are not thinking because it no longer matters, from FX perspective also. So when suddenly 50,000 crore goes away from a market like India, that's what, $5-6 billion. That $5-6 billion has become nothing for India. Why? Because we have $750 billion of reserves. 10 years back, these reserves used to be $220-230 billion or maybe 300 billion. And our annual trade deficit was 125 billion. And why were we calling fragile 5? 300 billion is still good enough. So basic thumb rule is you should have anywhere between 6 to 9 months of your import bill as your FX reserves. That's the traditional economics thinking. But then why market used to panic? Because all bad news used to get aligned for India. Because we were the importer of oil. I mean, we are still importer of oil. So when oil goes up is typically when a lot of these war happens. So people anyway go into that risk off mode. Risk off mode is basically you take on money from risk on, you go to the risk safer bets, which is basically short EM, long DM, or within equity to bond or any of those kind of plays, right? At that moment is when you actually need money, and that's when people used to take out money. So that's why every time such fall used to happen in past, we also had 2% fall in INR. Now no one talks. I mean, there is no discussion about where is the INR USD, because we don't even realize where is it. Hoga somewhere 83, 84, who cares, right? Because it is so less volatile that FX as a parameter has gone out of the wind for now. I'm not saying it's a permanent gone out of the wind. And that's a big resilience. So we should be happy. Whether we celebrate or not is a different thing. So we should try to see these things in wider picture, FX and everything. But I'll surely request Monative to give his take on this question if he wants to add or say anything else.
Yeah, I think you put it very well. The only thing I'll say is, money moving out of one market doesn't mean it's going directly to another market that's running. Most of the times, they're very different decision makers on those two things, right? The people that invest in China are going to be a different team than people that invest in India, though they might be part of the same fund. It takes time. When you sell, you just sell. It's sitting in cash somewhere in some fund, or it's just far less leverage, which is what I think it is for most part, is just lower leverage because either they're capturing gains or they're taking down risk. That's all it is. You shouldn't read into every time an institution sells, right? They could have, in addition, the third thing might be they have demand for, withdrawal. So it could be any number of things. I don't think there's anything more to read into it. India is still solid. There is very strong belief, certainly among people I talk to, in the industry here in US, that India is, is still the place to go to, in Asia where the growth is strongest. Look, China's got a whole bunch of problems, but there was a period of time, a month, 2-3 months ago, let's say, that there was an outsized risk reward opportunity in China. Whether it's still there, I don't know. That's opinion at this time, but it remains to be seen if the policy stays consistent and the interference by Xi is minimal. There is a long way to recover for China. India, again, its own story. I don't think there's a need to mix up the two. I don't think it's India or China. I think, there will be exposure to both. Relative exposures will keep changing based on, where the growth is. That's all.
So this question is to both of you, although more or less it has been discussed, but discussing China as an investment case or vice versa, what would be 2-3 pointers which are positive so as to consider it as an investment case? And negatives, we already have discussed many, but again, for simplification, Sandeep and Monative, if you want to.
Prince, depend upon whom this question is addressed. If this question is addressed to an Indian retail investor, I think apart from the experimental fun, first of all, practically it is impossible for us to take China exposure in any cost-effective manner. In fact, it is impossible for us to take any international exposure except for US stocks. Even that is very costly, right? Most of the these people are probably charging 2.5%. Every now and then RBI will put some restrictions. So there is practically no way for an Indian retail to take that exposure, right? And I'm sure you're not asking it from a, so depending on whose mandate, right? So whether you're running a $20 billion global fund, then the answer will be very different. I'm assuming most of your audience is like me, and that's Indian retail. I don't think, I mean, we can do it for academic fun, but not for any asset allocation strategy, because those kind of exposure, I mean, what can China offer? China can simply offer some kind of a hedging. Anybody wants to do commodity, you can always try to play in India. At least you have the better ability to understand things in Indian context. In any case, a lot of commodity gets a bit of protection here and there. So much more stable environment. So from return perspective, I don't think anybody need to go anywhere, right? Doesn't mean China doesn't have a positive. It's just from where we are, it probably doesn't exist for us, except for the news. I mean, we need to understand what is happening in international finance, so that sometimes when moves like last week happens, we have the intellectual ability to understand, appreciate, ignore, not ignore. That's a secondary thing, right? So from that perspective, we should track. But that doesn't mean we start exploring it, how to buy Chinese stocks. That's my 2 cents on it, Prince.
Right. Monative, you want to add something to it?
Yeah, a couple of things from a completely different context. If you have, I'm in the U.S. markets. I was born in India. I've lived in U.S. for the last 30 years. So I'm here. I'm a U.S. citizen now. But if you're looking at it from outside India perspective, right? There's a few things. The potential positives for China, assuming that policy doesn't mess it up again, right? Like she doesn't decide to get up in the morning and do something, negative again. There is a massive amount of personal savings in China, almost $4 trillion, $3 to $4 trillion, and personal consumption is very low. So if that picks up, you could have, a massive run in a lot of local sectors, right? So that would more be A shares, right? financial sector, insurance, retail, restaurant, that kind of companies could have a massive run. But there are problems still, right? The problems are very large. I mean, there is a terrible mismanagement in banks there, so they're sitting on mountains of bad loans, and many of them could be, functionally bankrupt. They're just being kept alive. They're zombie banks. So if that needs to be dealt with, you could have the situation that you had in the last couple of years of something like the Chinese real estate, that you could have institutions that can't really go forward anymore. But these are mostly government owned entities, so they'll probably figure out a way to get through that. So that is a problem. So underlying issues are not sorted out yet. They're just papering over the problems with more funding from the central government there. The second is this massive overcapacity. With the result, utilization is really low. So, if you want to do it the right way, you start removing capacity, get rid of a lot of additional capacity, just get it out, keep the most efficient factories open, and just get rid of the rest altogether, or turn them into something else where there is better capacity utilization. Without that, you're still going to run a lot of factories suboptimally just to keep unemployment numbers low and people from starting to protest on the street. So these are structural problems that if they're not addressed at some point in time, it becomes it's impossible to hide it anymore. But there are also opportunities in that sense, that if you slowly start addressing them and the consumption side of the economy picks up, China could go a long way because there is so much cash sitting on the sidelines there. But the other big problem is geopolitics, right? If China does something or gets closer to doing something in Taiwan, then all bets are off. You're going to have sanctions. You're going to have major pushback from all of the West, and that's the end as we know it for a period of time of the Chinese market and foreign investment interest in China, and maybe go as far as starting to delist stocks. But that is still an edge case. The likelihood that happens is still small, though there's a lot of noise about it. Chinese leadership is not stupid. They might be arrogant and belligerent, but they're not stupid people. They do understand that their economy is still completely export oriented, and if that gets shut down, they're going to have 20, 30, 40, 50% unemployment. So it is probably the only reason that's keeping them from invading Taiwan, and it probably will stay around as a main reason for many, many years to come. But other than that, I still think that short term, the next 6 to 8 quarters, there could be some significant recovery. Not at the speed we've seen, right? 30% in a month is just stupid. It's just unsustainable. But seeing a high teens return for the next 2 years, I think is very possible.
Actually, glad that you brought up the point of sanctions. So, I mean, I work with an investment bank, and I mean, kind of support a EMEA desk and a US desk. I mean, I'll surely not talk about the numbers, but the kind of operational hassles we had to go to ring fence these Russian assets, then initially take 10% liquidity adjustment, then 50%, then literally writing it off, then litigation reserves, then potentially violating some sanctions. It's just a mess, right? And that didn't stop Russia from doing what it. I mean, that was the Western thought that they will just bankrupt Russia. Forget about bankrupts. I mean, ruble is still very strong. They found out a way to coexist, survive. I mean, right, wrong, that's a big debate, right? I'm not saying it will be similar, easy for China, but that's one. In fact, you also talked about the pressure to delist some of these Chinese. I mean, the reason likes of Alibaba and everything, Baidu, etc. started trading at those multiples, because there is this constant chatter in US political circle to at least get them off from the 401k, and then only way you can them off from 401k is to not let their ADRs trade in. I mean, they see it as, Americans funding Chinese stock. I mean, that's a stupid take, but then politicians do political things. I mean, who would have thought 3 years back that all Russian stocks will be simply suspended in Western world, right? Seized assets. I mean, just not the shares. A lot of Russian linked assets are simply frozen. No one knows even. I mean, no one can't even talk. Forget about, trying to do canvassing that please allow us to sell at least. Why are you punishing me for that, right? But it's just like one fine day they decided they wanted to set up an example and they ended up setting up a bad example. So it is complicated, and for those reasons only China trades at those multiples and India trades where it is. One more thing, when we talk about, I mean, I'm going back to the subject here. When we talk to companies, small, big, we read papers, what we miss is when global MNCs are looking at alternate things, they naturally can't go to places like Thailand and Vietnam, because Vietnam, most people know that these are Chinese entrepreneurs just setting up shops. It doesn't solve anything. Hong Kong, Singapore, or in a way, I mean, anyway, not manufacturing basis, right? And Thailand, etc., is again out of picture. So the only practical options, a place like US has is either Mexico or India, right? Mexico has its own work culture kind of a problem, or Brazil or entire Latin America, but within that only Mexico has a only potential near shore kind of a thing. India only gets, I mean, no one likes India, but uh, because of, a lot of ease of doing business challenges, because we are just much more arrogant than we should be, right? As a country, or at a policy level. Having said that, I mean, we didn't roll out anything for Tesla, right? He's already in China. He gets all the treatment. He would have been your 2024 mascot kind of a. Everyone thought he will be in, but India government is not even ready to entertain Elon Musk. Forget about a small player here and there. In spite of that, people are looking. I mean, Apple has already done it. I mean, no matter how much we talk, Apple has already done massive China plus one, because they were clearly given mandate to do that. That is because of geopolitical power India brings. So it is no longer just, I mean, there is this element also that if need be, India can stand up on its own, as well as assistance of a Western world. So from that perspective also, it becomes a China plus viable option. It is just not I mean, we are still pathetic on most counts. It's still very tough to open businesses when Indian entrepreneurs have struggled, forget about a foreign company. So we can't match. I mean, Elon Musk very famously said, right, his Gigafactory, he said, like in 9 months, he said in California, it will take 3 years. I don't know how many years it will take in India. He said flat 9 months, he did the factory there in Shanghai. So, I'm sorry, literally going in a different direction, but it somehow is on my, top of my mind all the time. Anybody been to New York? Empire State Building was built in what, 9, 10, 12 months? In 1929, we can't build, 1/3 of that in Gurgaon in 5 years even today. So sometimes it's very easy to miss the bigger picture, but we are just lucky on so many counts to be here. We have bad numbers, but then that's also an opportunity, which is for us to seize. But back to you, Prince, or maybe anyone else wants to add anything.
Yeah, we got one more speaker. Let's see what he has to say. Smart case, you can unmute and keep your thing. Yeah, please.
And Prince, see if Sushil wants to come as a speaker.
हेलो सर, संदीप सर, एक्चुअली मैंने आपका फेस टू फेस देखा था मिस्टर विवेक बजाज के साथ, एंड आई जस्ट फॉलोड यू ऑन दिस ट्विटर एंड जस्ट गॉट अ पॉपअप. दिस इज माय फर्स्ट interaction with you on this platform. I never used this platform before of this having conversation. So I'm more interested to learn about, of course, we are talking about the China plus and minus strategy. But I just want to ask you that is there a possibility that you can also, go with your YouTube channel where you discuss about how we can identify the good SMEs for the longer term and getting more detail about how we can do the analysis by picking any of the SMEs and we can find the good opportunity there. That's the only request I have. Thank you.
Okay, so thanks for the question, but a short answer so that others don't get bored. In fact, I feel after face to face, my ability to talk about stocks has become even more limited. So first of all, I will not use word never say never, but I mean never kind of a thing. But as of now, I have no intent to get into advisory. I have no intent to launch a YouTube channel. I have absolutely no intent to do any suggestions or anything. And as an individual investor, I used to be very freely talking about the stocks I own, but that was when hardly anybody knew me. Now I feel that because of people who track me has gone up. The risk of being misquoted, risk of being trolled for out of context has become much higher, and my incentives are such that I have absolutely zero intent to do that, and I'm saying it in as polite way as possible. And that's why I'm now forced to talk more philosophical. If you go to my Twitter timeline, you'll realize I used to talk about companies much more hardly 3 months back. Now I've stopped doing that also because I've realized the cost of that outweighs much more than any benefit I might pursue. I mean, it is always me talking to me, and that's what, in fact, most Twitter handles do it. These are your, think pads also, right? When you write something, you're initially talking to yourself and you're putting it up, right? So that way I use it, and I love these Twitter spaces. Once in a while we end up doing this stocks, but I don't have any structural way, so sorry to basically say that way. And
No
even in
problem.
that face to face, you realize
So,
that I didn't talk about a single stock. It was not only very well planned to not do that, but it didn't even come to my mind to talk about a stock there.
so Smart Cancerian, for your benefit, we have had couple of sessions and more on the framework part. So definitely it would be helpful for you to learn the nuances of equity market as a whole, and SMA is again one segment. So if you listen to the previous conversation, you'll get a gist how the thought process is, and from that, if you would be smart enough, you'll get your cues. And company names are commodity, you'll find in your own ways, I guess. Thank you so much.
No problem.
So Sandeep, Monative, let me see if there is any interesting question left, or if anything to your mind. Otherwise, we'll close for the day. So one question, let's keep this as the last question. So this question is from J Parmar, I guess. So he's asking, when FII is around only 10% of the overall market, why we focus so much on action of 10%, then remaining 90%. So as to reframe the questions, so do we believe the relevance of FII is no longer in place?
Short take. First of all, 50% is promoters, right? Which is government of India or private promoters. So that's a logged one, right? What is float is 50%. Within that also likes of LIC, likes of, mutual fund having 2 lakh crore of AUM. So practical float is very limited. And similarly, it's not like all FIIs want to sell. By the way, FIIs are not 10%, they are 18%, right? They used to be 22, will probably be 17, 18 kind of a thing. So they're down 4% in last 4 years, 3 years. That is what we bought back, and it's not permanent. You never know, 10 years down the line they may become 25 again. The reason why we track FIIs, one is obviously they are the delta in the town, right? So they are the only ones who sell for outside of India regions. So that's our linkage from the global world, right? No HDFC fund will, I mean, they can do and they might be doing also, but I don't think they run that kind of a top down analysis. Hey, Europe rates are up, let's sell something in India. So that's what FIIs do. So in a sense, it becomes that piping. Second is we are just fond of FIAs as a country, right? I mean, everyone loves in India. I mean, we just love Western world, right? So we probably give them more weight than we should. That much I agree. But will they become? So let me frame it differently. Let's say I have two blocks. One is DII 18%. One is FII is 18%. Should I track more FII or DII? I'm of the camp that I will still track FIIs more because they have bigger factors which will decide the India PE. DIA is a compulsion, right? When they're getting SIP, they have to dumb down, invest in India only. LIC has a compulsion to be, I mean, they do take equity versus bond calls kind of a thing, but then that's it, right? So a lot of flow can simply continue. FII selling can be seen by simply that Indian participants are not taking a valuation view. They are basically doing the financialization of their saving. But that's not a compulsion FIIs have. And that's why they are constantly selling, which is by their actions, they are constantly telling us that that they find India very overvalued. And 4 year, I mean, we say it all the time as a fun and many times in little patriotism, many times in casual way. Some people are serious also. Hey, FIAs को बेचने दो, देखते हैं कहाँ तक जाएगा, इनको जीरो कर देते हैं. So all those talks are good, but the reality is it matters. And 4 years in financial history is a very short period. What if they have the last laugh? I mean, I'm not saying it will happen or it is my base case. But don't think that just because Nifty is at 24,000, they are selling from 17,000, they are fools and we are the smartest people on the town. What if 2 years down the line, Nifty goes back to a, again, this is just a what if, right? And can anybody rule it out? Obviously not. Nifty goes to 18,000, retail surrender, and then FIIs go back again. So again, that's not my base case. I'm just saying there is no need for such quick judgment. I mean, in a casual manner, in a jovial sessions here and there is great, but not as a big statement that FIAs are irrelevant.
Monative, do you want to add something?
Yeah. Hey, look, Indian market has gotten pretty big and the daily volumes are pretty large. So as long as whatever is being sold is absorbed without a massive change in price, I think it's irrelevant after the fact. So the sell has happened, somebody else is getting in, more than likely, you're just switching from a foreign institution to an Indian institution. You still have a stable stakeholder, so as long as it gets absorbed without a massive price change, I think net there is not much happening. You still have to go back to see, why could they have sold, right? Was it a valuation question? Was there some other news related to it? And value those differently. Just the action of selling itself, I think we pay way too much attention to that rather than, the underlying circumstance why they sold. That circumstance might be completely irrelevant to Indian investors. They might have had a massive request for withdrawal. They might have had a change in management with the new asset manager deciding to, bring in somebody else to run it daily, and they might want to start with a larger cash position. There could be any number of things. Some of those are relevant to the company, some of them are not. You should take that into context more than just the act of a foreign fund selling. I think beyond that period of the sale, it's irrelevant.
Perfect. So I think other questions are either repetitive or maybe not that important. Perhaps we may take in future sessions if I find anything relevant which you missed today. So thank you so much to our speakers and audience for connecting for us. Great discussion.